Rosenberg research says the U.S. housing market could drive headline inflation lower. Yes, folks, Rosenberg research bringing out a headline that not many people expected, actually indicating that the U.S. housing market is in the worst slump since 2009, and that the outcome of said slump might be deflation, not disinflation, not inflation, but deflation. Again, this housing slump hurting sales, hurting transactions, not yet price, but we will see where this goes. The U.S. housing market could send inflation plummeting in coming years, is the headline of the article. If you like to go ahead and do a quick Google search. Big week ahead for economic data in housing. Starting on Monday, we will get new home sales. Again, it will be interesting to watch. The doomers likely talk about new home prices falling, where in reality, we're selling smaller homes. And isn't that a good thing? In addition, on Monday, we will get two Fed speakers. It will be very interesting to see what the Fed is saying post Jackson Hole. In fact, we had conversations from Fed President Hammack and Musselman in the last 24 hours, which we will catch you up on in a minute. On Tuesday, we will get Case Shiller. Again, always remember with Case Shiller, very much a lagging indicator. We are obviously just on the cusp of entering September, and I believe this data will be for July. On Tuesday, we will also get durable goods and consumer confidence. Thursday will be weekly unemployment claims. Again, remember last week, weekly unemployment claims did take a step up, so it does bear watching. Will it just come back into the 220s? Something we need to watch. We will get GDP for Q2, the first cut of GDP for Q2, and pending home sales. Have we seen pending home sales go up with mortgage rates falling? And then on Friday, we get our third and final inflation reading. Remember, early in the months, we get CPI and PPI. We will get PCE. Headline inflation is expected to be 2.6, and core is expected to edge up to almost 3, coming in at 2.9%. Following that will be also consumer sentiment. I do want to let you know, for those of you that have bought tickets to our Vegas event, all of you will be getting some free goodies. If you purchase a ticket in the month of August, which I believe is about 5 or 6 more days, you will get the following. 1, you will get the free course or the course, $99 course, How to Get Your Money Right. What I will do is I will log into Teachable and add all of you for free to that course. And just because I feel like I'm in a gracious mood, I will also give you my most popular course, the $50 buy box course. So by spending at least $300 on the ticket, you will be getting $150 in free goodies. And as an extra special bonus, we will do a 60 to 90 minute phone call in September just for ticket holders. So again, if you want to come to this event, you know you're going to come to this event, buy your ticket now. I'm obviously being crystal clear. I'm doing this early because I have a big check to write in about 70 days, and I would rather not reach into my account to do that if I can. So again, buy the tickets, help me out, and as a thank you, I will give you the Get Your Money Right course, I will give you the Buy Box course, and we will talk sometime in September. So hopefully you see that as good news. I do want to talk about just how bad the housing market is. Again, back to Rosenberg research. In the last 6 months, housing starts down 23.9%. Again, remember, when you hear housing starts, that includes multifamily, just so we don't get it twisted. New single-family home sales down 23.7%. Remember, Lennar, thanks to Resi Club, now has a website for investors. And finally, existing home sales down 16.1%. All of these are really transaction-based, can lead to recession-like conditions. I would argue that we were already here. Housing has been in a recession, aka depression, for the better part of 2.5 years. Let's talk about the Fed. We did get some talk in the last 24 hours. We'll go to Hammack first, Fed President Hammack. A large weakening in the job market could drive the Fed to cut rates. I think what we're seeing here, folks, is the first sign that the Fed is pivoting. Again, I do believe Jackson Hole was a pivot. As I've been saying for 6 to 8 weeks, jobs over inflation. I believe that's exactly what Powell said on Friday. And now we have other Fed presidents coming out saying the same thing. Fed President Musselman says it's reasonable to expect tariff inflation to fade. It's funny how the Fed went from inflation to, well, it's not that big a deal. It really has been a noticeable change already since Jackson Hole. Policy rate might need adjustment if risk to job market escalates. And the next job report could justify a rate cut. Folks, it is my belief, and I've said it before, that I think Jerome Powell got a sneak peek to the September adjustments that will be coming next week, and they are not pretty. So he has been dancing his dance to basically set up a September cut and bring that to bear. Got some notes from Resi Club talking about the average cash out refi. Apparently, the average cash out refi in Q1 of 2025 was $104,183 to be exact. Now the question is, what does it mean? Well, if you are a doomer, you probably would say something like this is a sign of distress. You have owners going in and refining what was likely a very low rate into a higher rate. And that could be true. Your rates may have gone from 4 to 6.5%, but you now have $100,000 in your pocket. What are you doing with that $100,000? Are you paying off credit cards? Are you paying for education? Are you investing in your home? Are you buying a home? That's where the question really comes down, is what are people doing with this six digits, $104,183. Very interesting to see. The one thing you know for sure is if you don't own a house, you can't do it. This is another sign of own assets. Again, the path to wealth, folks, is in owning assets for the long term. Something we talk about on this channel a lot. Deutsche Bank has updated their rate cutting forecast. They were in the camp of one cut in December. They are now 2 cuts, one in September and December. What are retailers saying? We're talking about Walmart, Home Depot, and the like, even Crocs. According to various retail reports which came out last week, I read a summary of various retailers. Retailers are raising prices, but not as bad as fear. When tariffs came out, the fear was that all prices everywhere would go up by the full amount, and that is just not true. In fact, some folks have seen demand destruction. The clearest example of demand destruction, which I shared, I thought was coming, is Crocs. Crocs actually cut their order size for the second half of 2025 in the clearest sign of demand destruction. Walmart demand destruction has been highlighted at the low-end consumer, just not purchasing. And then finally, some areas, Walmart was able to absorb the entire tariff. Again, this tariff is interesting because the entire supply chain is choosing to absorb some, or in Walmart's case, sometimes all of the tariff, making sure that the consumer doesn't see it. And the final article I read was talking about the top 10 markets that are crashing. What I chose to do here is just get the top 5. If you want to see the article, you can look it up. But according to this article, since mid-2022, so we're taking the peak of the market, mid-2022, San Francisco is down 16%. Cape Coral is down 18%. That is in Florida. New Orleans, down 18%. Austin, Texas, down 23%. And surprise, surprise, Oakland, California comes in at negative 23% as well. Folks, do me a favor. Go out and get your ticket to our Vegas event. You know you want to be there. Let these extra goodies and thank yous be your inspiration. If you buy in August, I want to be very, very clear on this. If you buy in August, you will get the Get Your Money Right course, $99. You will get the Buy Box Deep Dive, which surely could change your real estate career all by itself. So that's $150 in goodies. And I will be giving you somewhere between 60 and 90 minutes, just us, just the people that bought in August, to have a conversation with me. We could talk about real estate, economy, health journey, whatever you want. Just get to know me more, get to share what's going on. So do me a favor, buy your tickets, buy your tickets, buy your tickets. Peace.